Good afternoon, friends. I'm Bharat Ganani from the Fundamental Research team. I'll present the Q2 FY14 earnings review for the automotive sector. Now, if you see the performance of the automotive sector, it was boosted by Maruti and Tata Motors. So the aggregate revenues of our automobile companies under our active coverage have grown by 3.6%, while the earnings have grown by 19.3% on a YoY basis. However, if we exclude the performance of Maruti, then the coverage universe will see a revenue decline of 5.2% YoY, while the profit after tax have remained flat. Similarly, if we see the automobile tracking universe, then the universe has reported a revenue growth of 18% on a YoY basis, while the PAT has grown by 42%. However, if we exclude the Maruti as well as Tata Motors from our tracking universe, then the revenue growth has been in lower single digit of 3%, and the the revenues have remained flat, whereas the profitability has grown in lower single digits by 3.3%. Now, if we see the performance of our automobile universe, despite the subdued revenues due to the lower volumes, most of the companies have reported a marginal improvement in their operating performance. We have seen most of the companies in our tracking universe report an improvement in the contribution margins due to the lower material cost which the companies have realized during the quarter. Further, the companies have maintained the cost control initiatives which have helped them to improve the operating performance despite the subdued revenues during the quarter. Now, as far as the outperformers and the underperformers of the automobile tracking universe are concerned, Maruti and Tata Motors outperformed. Maruti outperformed mainly on back of the lower corresponding base during the corresponding period last year. The earnings were impacted by the strike at the Manesar plant in Q2 of FY13. So the earnings have outperformed on a low base. Whereas if we see the Tata Motors, the company has seen a robust growth in the earnings, mainly driven by the improved performance of its subsidiary JLR. Now, if we see the underperformers of the automobile universe, then we see that Ashok Leyland has underperformed yet again. The company has reported a loss yet again in this quarter as well. The performance has been impacted by the steep decline in the MHCV volumes as well as the higher discounting of the MHCV space. So we see the performance of Ashok Leyland being impacted by that. Now, as far as our change in the recommendations is concerned, we have included Apollo Tyres in our buy list in this quarter. This is because of the company has shown strong performance in Q2 FY14. Also, the raw material prices, mainly rubber as well as crude, continue to remain subdued. So we see the margin performance improvement in the margins to sustain in going forward as well. Also, the possibility of the Cooper Tire deal, which would have put significant stress on the balance sheet, seems low due to the wage hike demanded by the Cooper Tire's US workers as well as the opposition by the Chinese joint venture partner. Now, as far as the outlook for the sector is concerned, we expect the demand to remain challenging in the post the end of the festive season. Continued weak macroeconomic environment, continued increase in the fuel prices, especially diesel, as well as the firming of the interest rates will lead to the demand pressures for the automobile sector in the near term. However, given the high rural income due to good monsoons and the higher MSP prices, the sectors which derive significant chunk of revenues from the rural areas, such as the tractors and the two-wheelers, would see and demand uptick. So we expect the two-wheelers and the tractor to sort of outperform the automotive sector going forward. The commodity prices are expected to remain subdued, which would help the companies to maintain the margins despite the subdued revenues. As far as our top pick in the space is concerned, M&M continues to remain our preferred pick in the automotive space, as it is a direct beneficiary of increase in the rural income.